welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll focus on recent trends in oil prices and how they might impact the markets and the economy. This is an important topic right now because the markets have been jittery the past few weeks. The S&P 500 has now experienced its first 5% pullback this year due to the Fed, a decline in technology stocks, and heightened tensions in the Middle East. It's important for investors to remember that short-term market declines are both natural and expected. Rather than focusing on day-to-day market movements, it's far more important for investors to understand bigger picture trends. Over the next few minutes, we'll discuss how geopolitics and oil prices might impact these trends over the next several months. First, oil prices have risen about 8% for the year, but that's still well below recent peaks. That occurred in early 2022 when Russia invaded Ukraine and oil prices jumped above $120 per barrel. That episode is important because energy prices drove inflation as well. This is one reason the Fed had to act as swiftly as it did in hiking interest rates to prevent prices across the economy from increasing further. Higher energy prices, including gasoline prices at the pump nearing $5, was one reason that many economists feared that a recession would occur. Thus, oil prices are a way in which global events can impact markets. Investors are especially sensitive to this today because the effects oil can have on inflation and Fed policy. Second, a key difference between today's environment and the past is that the United States is the largest producer of both oil and gas in the world. In theory, this helps insulate the U.S. somewhat from global events, at least relative to historical periods such as the 1970s. Specifically, this chart shows that U.S. oil production has fully recovered from the pandemic and now exceeds 13 million barrels per day. That said, the U.S. is still dependent on the global energy markets. Not only does the U.S. still import foreign oil due to differences in the type and quality of the oil here and abroad, but oil is a global commodity, so price fluctuations can impact U.S. consumers as well. All in all, higher oil prices can certainly impact inflation, as they have so far this year. Greater uncertainty around inflation also impacts the timing of the path of the Fed rate cuts, which the market is highly sensitive to. Finally, these factors not only affect the broad economic outlook, but they impact investment portfolios as well. Specifically, this chart shows that the energy sector is now the best performing group in the S&P 500 year to date, especially with the decline among technology stocks. What is interesting is that the energy sector has behaved quite differently from the rest of the market over the last few years. From 2014 to 2020, energy was among the worst performing groups due to overproduction and a collapse in oil prices. However, the energy sector surged in 2021 and 2022 as the global economy bounced back. While the past is no guarantee of the future, this shows that the energy sector is an important part of any diversified portfolio and can help balance risk. Investors should continue to stay diversified across all sectors and maintain a long-term perspective. We hope you found these insights valuable. If you have questions on these or any other topics in more detail, please don't hesitate to reach out. We look forward to speaking with you.